New highs are likely for stocks. The stocks on Friday reversed up right before the weekend, and they formed what appears to be a hammer candlestick. The junk that barely moved down, so this is a good sign for stocks as well. Gold is looking quite vulnerable as dollar holds support at one of the support resistant lines. And we'll look at copper as it could go again for highs. It is now sufficiently oversold. And we will also look at natural gas as it runs into resistance. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 31st, 2024. As always, please don't forget to hit the like button, subscribe to this channel, make a comment, and share this video. These actions are what keeps this channel going. Again, thank you for them. If you're a subscriber, stay tuned. We will be covering various securities in the members only video, notably market breadth, crude oil will be covered in the members only video. There's going to be also quite a bit of large cap securities such as Apple, Visa, as well as several of the more speculative types such as some of the Chinese shares, JD.com, Bilibili, as well as some of the American ones as well, like Victoria's Secret is looking good. Okay, let's get started. So we're currently looking at S&P 500, and one more thing on this chart, as always, I'm using my proprietary indicators, for which you can find out more by going in the description and following the link in the description. These lines can be on your chart. So S&P 500 hit records right there on the 23rd of May and so far has pulled back. Notice today's candlestick looks very much like a hammer. Literally, it looks like a hammer. That one right there looks like a hammer candlestick. Usually they indicate support. Now this hammer is sort of in a no man's land. Ideally this hammer should have been around at least this green line, but possibly the blue line. Again, those are my support resistance indicator lines. We can also just look at, for example, this is a 200-day exponential moving average. You can see it's somewhere down below around where the blue line is. But for now, you can see that we're not really even entertaining a pullback of that magnitude. We barely budged towards this green line, sort of similar to what we had back here in April, but it was actually even a more sizable pullback, and it got bought immediately when we made new highs. So something of similar nature could unfold, and I wanted to just share this chart. This is a 4-hour chart, so 4-hour time interval where I'm hovering. It means that each candlestick is 4 hours worth of activity. And this is a symbol ES1 exclamation point, also known as continuous futures for S&P 500. So what I wanted you to take a look at is, so we're looking at this initial breakout right here in early May, 6th of May, and then we had another opportunity to buy a few days later. So remember, this is a 4-hour chart, so you either have to have futures account or you will need to use S&P 500 ETF to trade it, but then again you cannot trade it during the night. So this data here includes, this is a continuous data, so it includes trading that occurred off hours, apart from trading hours. But notice again what happened here. So we rallied to new highs on May 24th here, I'm sorry, 23rd here, and then we've been pulling back ever since. So notice again what happened here. Literally, this are two candlesticks from today, the 31st of May 7 in the morning candlestick and the 11 in the morning candlestick. So notice a pullback towards the blue line and then a close above it on the same candlestick, and then a rally, big rally at the very end of the day today. So This is just showing me that we're seeing support right around where we want to see it, around the blue line. This is a great opportunity to buy. But remember, this is a 4-hour chart, so you will need to somehow babysit this trade in the off hours. But to make a point, to prove a point that my lines work on most time frames, you just have to know how to use them. This was an opportunity to trade if you could do it. For example, using either futures, options for S&P 500 ETF SPY or ETF SPY itself. So we're basically pulled back slightly and we're trading next to records. I think the new records will be made relatively soon, and I will explain why in a few seconds. One of the reasons is because, for example, here is junk debt, JNK, and as always I say that high yield bonds, junk debt correlates highly to the S&P 500. So here it is, JNK, and down below here you can see a correlation coefficient in yellow here, and mostly it's very positive. So high yield bonds, JNK, and stocks correlate highly. They're doing the same thing. And notice that junk debt actually is next to records as well, and it did hit new records just a few days ago as well. So no divergence there, no negative divergence. We're seeing stocks and high yield bonds doing the same thing. Notice on this weekly chart of high yield bonds, this looks exactly like a hammer candlestick as well. Maybe a doji hammer. So very doji just means very thin real body. You can basically the open and close were the same, but the low was very low, and notice that we closed next to the highs. So this is a doji hammer, weekly doji hammer, and it's a good thing, I think. Doji just means it's one of the terms used in stock trading. For you can find out more about it by going to chart school and StockCharts.com and looking up candlestick analysis. So high yield bonds also have been moving up for the past 2 days, and actually they moved up today before S&P 500 did. So S&P 500 only moved up at the very end of the day, but high yield bonds were positive throughout the day. Notice that they gapped up. So by and large, this is showing me that we're seeing a setup for another attempt at new all-time highs. So I think stocks will hit new records relatively soon, within probably the next week to 2 weeks. Let's switch gears. We're currently looking at the dollar currency index, DXY, on tradingview.com. So notice on this chart, we're seeing a bottoming pattern. You can see upward facing arrows. This is where the security, in this case dollar currency index, has closed above the blue line, and previously it was below this blue support resistance line. So usually this is where I want to be buying, especially notice the past 2 to 3 weeks we've been basically trading right around this blue line, and already we have 3 buy signals. Now currently dollar is correlated. It usually correlates quite strongly with S&P 500. I'm sorry, usually gold and dollar move in the opposite direction. So on this chart, gold is up here in the upper part of the graph. US dollar is in the middle, and down below here is the correlation coefficient. So normally, if you look at this correlation coefficient and just sort of ignore this forays into positive territory, by and large, the correlation is negative, and sometimes it's strongly negative. And it makes sense, because if you look at the way the gold is traded, it's traded as XAU USD, gold divided by US dollar. So if the bottom part of this equation is getting bigger, this currency pair should go down. Okay, but occasionally this doesn't happen, and we see correlations positive correlation. In other words, when gold goes up, dollar also goes up. It's an unusual situation, and we're currently in the middle of it. In fact, we're as far as 70% correlation, where gold and dollar are moving in the same direction. But also notice that, yes, those correlations occasionally spike into positive territory. They rarely last for, more than a few months. And we're basically there. And notice that the correlation has been now kind of rolling over into a normal territory. So I think if dollar will hold support here, and especially if it holds support and actually rallies, then gold most likely will come under pressure. This is gold on daily chart. So also on this chart of gold, okay, notice that this is an all-time high here set on May 20th. But then we see two kind of potential peaks. You can see one that was around April and another one around May. So is this a double top? It's possible, especially currently the way gold looks. It looks quite vulnerable. So why do I say that? So notice the way that this close occurred. So the close was at 2003-7. And this previous close was at 2003-8. So we have broken this low from the 23rd of May close. So this is a lowest close in since early May. Now again, if I'm correct and dollar will continue to gain, then it's quite likely that gold will continue to pull back. So a very obvious target for a pullback would be this blue support resistance line, which is currently at around 2,210, so 2,200 or so. So again, if the dollar holds support, continues to rally, gold most likely will come under pressure. But if it gets down here to around 2,200, it would become oversold, and at this point we'll need to make a decision whether or not to buy it again. So notice, for example, this upward facing arrows. Some of them were actual alerts, and some were for informational purposes. So light blue is actual alerts, light purple are for informational purposes. So we're gonna have to make another decision to see if we want to buy it again. But right this instant, gold kind of looks vulnerable, and I want to just do nothing with gold and to see where it goes from here. All right, let's move on to copper. So copper sort of followed similar trajectory as gold. Very big run. It's difficult to trade copper in the United States. There's very few opportunities. I mean, there is I forget. I think there is some ETF that follows copper. It's barely traded. This is copper futures, so you have to have a futures account. In Europe, you can just trade contract for difference, so CFD. Wonderful, I thought. I don't know why we don't have them in America, but whatever. Anyways, using my lines, the opportunity to buy was back in March of this year, and it just took off. Copper just took off. Went from about 3.9 or about $4 to about 5.1. So it really went quite strongly higher. But right this instant, again, as I was just showing this thing for gold, this chart for gold, if gold pulls back towards the blue line, then we will be thinking about buying it again. And we're basically there for copper. Copper pulled back towards the blue line. In fact, it actually touched it. I'm gonna zoom in on this last candlestick. I believe it touched it, yes. So we had a touch of the blue line and a close above it. So technically speaking, we do have a signal already. And at this point, let's see. I mean, I don't see a big slowdown in demand for data centers, and turns out copper is used in data centers. So artificial intelligence, definitely copper is needed there. Building materials, etc. So we'll see. I guess we're right there. We should be thinking about buying it at this point for at least a bounce higher. Okay. And I wanted to wrap up today with natural gas. So natural gas has been in a slump, really. Latest selling opportunity where I'm hovering occurred in in January of this year, January 25th, 2024, this year. It collapsed afterwards. And then notice this gap up right there where I'm hovering between April 26th and 25th and 26th. So gap up is usually a sign of buying pressure, and it just took off afterwards. So as I was looking at this chart a few weeks ago, I was saying that to get to the bullish levels are above the blue line. We haven't gotten there yet, so we're looking at, or rather, we have gotten to the blue line, but we haven't actually penetrated above it, and it's really quite interesting. You can see that we tried right there on the 22nd of May, and yet again on the 23rd of May, and another time on the 29th of May. We really tried to get above the blue line, but so far have failed. So we're looking at this blue line, which is at around 2.848 currently. It's acting as resistance, literally, it's acting as resistance. And I mean, it could still obviously can turn around and continue higher, but for now we had 3 days of resistance, and we'll see if we will have another attempt to break higher. Technically speaking, natural gas is still in a downtrend because it has closed below this red line and have not yet closed above the blue line. Okay, this is my definition of uptrend when the security closes above the blue line. All right, what do you guys think about any of the securities we discussed? Stocks, high yield bonds, dollar, gold, copper, natural gas. Make a comment and see what do you think? Is it gonna, are any of the securities going higher or lower? Are you long any of them? Are you short any of them? I'd love to hear from you. And once you're done making a comment, head over to MasterChartsTrading.com. Click on sign up. So again, you can get the same indicators on your chart. This is a TradingView.com interface. So you can have the same exact indicators on your chart. All you gotta do is sign up for a free TradingView account. This is a TradingView.com interface. Get a free TradingView account. Come back to my site, MasterChartsTrading. Sign up for the indicators, and I will open the door for you so you can have the same lines on your chart. If you don't really want to have the indicators, you just want to know what I'm doing and what I'm sending out to my subscribers, you can sign up for the newsletter. And of course, the best deal is to get both trading indicators and newsletters. And once again, I have added yearly plans. So if you, let's say, buy indicators and newsletters for a year ahead, it's $599.95 per year, which is equivalent to $49.95 per month. And you can see that monthly subscription is $59.95 per month, so it's 17% off the entire if you buy a year ahead. All right, let me know if you have any questions. Thank you for watching and have another great trading week. Bye bye.